All right, we just had the best week for the market, particularly the NASDAQ, all year. Growth stocks did very well, and while we may have been a little early on our call for these growth stocks to rebound back in January in our Medium post, we're getting the move we talked about based on what seems to be the logic we talked about then, that many of these stocks were simply totally obliterated beyond where they should have been. One, for example, that we've talked about in past videos and past videos this week, Editas Medicine, trading below pre-pandemic levels, does not make a whole lot of sense given what's going down fundamentally at that company. And we've seen a 20 or 30% move in that stock and many other similar stocks. It's unlikely we're going to see that kind of trajectory continue. The Fed is raising rates. There is still some uncertainty. It's been a great run thus far, but the question is, will it continue? And I think we have to change the way we've been experiencing markets for how things are going to go now. We've certainly seen a little bit of a surprise for many people that this rebound came right as the Fed was increasing rates. It's kind of funny when you look at it, hindsight's 2020. Clearly, this reason why the stocks fell was so much anticipation for that when we get the actual thing, it doesn't hurt nearly as much, but it's still gonna hurt. And the Fed wanted to correct today, it sounded like, any sort of dovish understanding we had. They wanted to make sure, no, we're pretty hawkish. We're gonna take this inflation fight to the inflation itself, etc. So, what do? Well, I'm staying long Editas. But something I did today might illustrate what I'm also doing and give you some ideas on what to do. I went short WeWork. I have roasted this company, talked about this company in the past, and I fundamentally don't buy the story. Not just because former CEO made a lot of headlines for spending company money on private jets, etc., when the company wasn't even profitable, but I think their product is no longer as in demand as it once was pre-pandemic. What is their product? Shared office space. I am now under the assumption that office space is a luxury good. Yes, there is some productivity enhancement, ideation enhancement that you can get from having an office, having people work together in the same space. That is certainly true for a company looking to optimize results for the amount of time given. However, as I said, luxury good, no longer a requirement to operate a company. And I think that is a massive miscalculation. The company made $700 million in revenue last quarter, but lost $700 million. I have not found a more atrocious balance sheet in my entire time of analyzing a company. Balance sheet, income statement, etc. It would be one thing if this was an early stage growth company, but they are in virtually every major city that I'm aware of, typically have multiple locations. If the business model is not profitable right now, well, they gotta show serious signs of growth, and I'm not seeing serious signs of growth, and I'm seeing a 100% negative margin. That's pretty bad. 700 million in revenue, not gonna say that's not a good number, but relative to, the office space market, relatively small. It seems like the people renting offices are not gonna be their primary customers. So I'm making a bet against the company after this 20 or 30% move. I think I've been thinking about it, been afraid to go short. Now we're going short. Now we're adding some downside protection because I know this company's fundamentals are so poor. They're so poor. And I know I have good companies in the same basket that move the same way this week, that have strong fundamentals, that can hedge against and protect me from this short if growth stocks continue to rise. I'm playing the fundamentals game. I'm playing the long game. And ultimately, that's what I think you should do. Because for the past 2 years, up until, I guess, November, we had a stock market that was moving on things like liquidity, Robinhood. It's that stuff, okay? With rising rates, a lot of people obliterated, inflation, war. I think things are going to return to a little bit more reality-based. And who wins in a reality-based environment? The person who can bet against the consensus and be right, because they have a more accurate understanding of the fundamentals of a company, industry, etc. So I would stick to the fundamentals more so than you had in the past. You know, obviously, some of us might try to say that we are 100% fundamentalists. I would say to say you're a pure fundamentalist, maybe some people are. I'm not gonna say anything about that. But I every now and then get tempted by the technicals, and I must admit, for as good of an investor as I am, I don't buy every top and sell every, other way. I don't sell every top and buy every bottom on the tick. Okay, I'm not the guy doing that. I'm not the one placing that perfect order on every single Apple position I've had. Okay, I'm not that guy. Somebody else may be that guy. I'm not going to speak for that guy that happens to get every single tick right. I happen to think that guy doesn't exist, but I hope I'm making some sense here. Anyways, fundamentals. We've had a little bit of a recovery. Maybe it continues. If you go to the video on the day of the Fed, day before, etc., we expect it to continue for a couple days. Going into a weekend, people are going to chill, and then maybe we get to the flat market. Maybe we get to the flat market because rates are rising. We have uncertainties. Stocks are not cheap. They're not screaming buys, except in the growth areas. There still are some. I still think Editas is screaming buy. But there's also some that are not. So, do we finally get a divergence between those two? I hope so. I think that's what we need, because otherwise we're going to have this run. It's going to go on a little longer than it should, and then all of a sudden it's going to stop and go. Sell-off is going to go on a little longer than it should. I don't want that. I don't think you want that. We don't always get what we want in the stock market, but we should hopefully get some fundamentals-based moves. I think that's a good thing to assume is going to happen in this environment, but again, we will see what happens. So those are my expectations. Those are my hopes and dreams for this market. I think it's a time when those two things align, but as we know, markets are uncertain. They like to throw curveballs quite frequently. The best thing we can do is stick to the fundamentals and make good choices. So that's today's video, and until next time, peace out.